Hello. Just going to sort out this lamp because no one is here yet. Could we just sort that out? Hope that's good. Okay, I'm on my own. Where is everybody? Hi. Okay, I finally had one person join me. Woohoo! Thank you for joining. Happy Wednesday. Happy Wednesday. I was meant to do this live yesterday, but I couldn't, unfortunately. So it took me a minute to sort myself out. You know how life happens. I'm glad I'm here today, and I'm glad you're joining me. I've got a few things, interesting things that I want to talk about today. And of course, if you are here, then please let me know who is here, because YouTube doesn't let me know. So just write your name and let me know who's here. And let's chat. Let's chat. Okay, cool. There's 4 of you now. I started and there was just me, and I was wondering if I was going to be all by myself tonight, which would have been fine. I would just have to speak to the camera. But yay! Hi, Q Investing. Hi, Nick. Good to see you guys. I'm just having a bit of a tea, as you can see. Good to see you guys. So yeah, I've got a few things I want to discuss today. And of course, if you have any comments, questions, anything at all, then, oh, my mum is here again. Mum, hey mum, you were here like the first one. You didn't come to the second one, but good to have you back, Mum. They liked having you in the first one. But yeah, there's a few things I'm going to cover today. And just let me know if you've got any questions, comments, anything at all. And we'll just chat, basically. We'll just chat. So let me just pull up my notes. So first and foremost, tomorrow marks my 5th month on YouTube. So can't quite believe that. Like, it's been 5 months and it's been 5 great months. I've learned so much and time has really just flown by. And so yeah, I just can't believe it's been 5 months, but a lot has happened in 5 months. How many? I think I've done 40-ish, 41 videos so far in 5 months, and I'm at 900 and something. 913 subscribers. So I'm assuming those of you who are joining me today are subscribers. So thank you so very much. I genuinely had a goal in my head that by the time I was on YouTube for 1 year, my hope was that I would have reached 1,000 subscribers. So to nearly be there after 5 months is just insane. Just did not expect it. Nick J, yeah, nearly 1,000. Isn't that crazy? Do you want to know what I'm the most? I said this in my last live, but I'll just say it again. The thing that I'm most excited about for reaching 1,000 subscribers is having that community tab. That is literally, that's like my goal. I just want that community tab, because the only crappy thing about YouTube is that you can't like communicate with people beyond videos and comments, and I don't like that. Whereas obviously with Instagram, you've got other ways to engage. You can even like DM people, whereas on YouTube you can't DM someone. So I don't like that. But a good way that you can engage with people is through the community tab. So I'm just like so eager to get to the 1,000 subscribers so I can get to that. Like, so excited. So if you are watching today and you're not subscribed, and if you're watching this on a playback and you're watching, then please do subscribe. It means a lot, and it's just a great support for my channel, basically. So yeah, first and foremost, I just wanted to say that. And secondly, yeah, the other thing that I wanted to talk about was this Deliveroo IPO. Now, obviously, if you're not familiar with Deliveroo, which I'm assuming everyone is, it's like an Uber Eats, Just Eat type company, and they are going to be going on the stock market. They're going to be publicly traded, so you can buy shares in their company. And so I I know there's like some hype around this right now. And IPO, if you're not familiar, means initial public offering. That's the first time that a company goes on the stock market to be publicly traded. So a company, as you can obviously, Deliveroo has been established for however long, but they have never been on the stock exchange. So when a company decides to go on the stock exchange, they become a public company and they can be, they can be publicly traded. So, with Deliveroo, I've been seeing some hype around this, and I am actually not really for IPOs that much. I've only just recently, sorry, I was just reading. I thought that was coming. I thought on my phone a comment was coming through from YouTube on there, but that was on a video. So I'm sorry about that. But IPOs I'm not too sure about, and mainly because I feel like a lot of times when something comes to market, they overvalue themselves, and so I feel like you're not getting the best deal when they first hit the market, unless it's some like undercover company that nobody knows about and it's going to blow. A company as big as Deliveroo, everybody knows about. And if you think a couple of months back, it was Airbnb that came on the stock market. Everyone knew about Airbnb. So it came on, and to be honest, it's gone up a bit since it IPO'd, but not that much. And I found a really interesting article on the Financial Times, and I'm just going to read you a snippet because I was like, do I have a right feeling about these IPOs, or what is the reality with it? So in Financial Times, they said, it turns out that the easiest way to lose nearly all of your money is via IPOs. There have been a lot of IPO losses in the past year or so, including Blue Apron, Uber, Snapchat, Pinterest, Aston Martin, Peloton, and Lyft. And there are likely to be a lot more. Only on Wednesday, Uber shares fell to their lowest point yet, $26 versus a float price of $45. I think this is, I can't remember when this article was written. I think it was last year or 2019, but no, it was last year. The interesting point is that this is not a recent phenomenon. Verdad ran the numbers and found that of the last 3,700 IPOs since the late 1980s, for which data are available, the median one lost 31% of its value from the closed price on the offer day to 3 years later. So 31%, no, hold on. The median one lost 31% of its value. So it lost 31% of its value from the day it IPO'd, which is absolutely insane. Over 5 years, that number was 41%. Not all growth stocks grow enough to justify growth valuation, or at all for that matter. And for me, it kind of just solidified. I already made up my mind about IPOs, but seeing it in the Financial Times was kind of like pretty interesting. And, again, I just think a lot of times they are overvalued. And if you want to, don't get me wrong, if you're interested in Deliveroo for long term and you just want to invest, then by all means invest and do what you want. But I just thought I would share. Yeah, I know, Nick, it's crazy, right? Crazy. And for me, it just kind of solidified what I thought already. I just feel like they come in to raise money. Like Deliveroo right now are trying to raise $1 billion, and a way that they're doing this is obviously by going on the stock market. And so, but I've also heard that Deliveroo aren't that profitable, and there's some issues they have with their profit margins. So for me, it's raising a slight red flag, but that's just my personal humble opinion. So I'm curious to know, the 9 of you who are here, are you interested in IPOs? Is this something that is this part of your investment strategy? Do you like to get in as soon as a company hits the stock market? Have you not thought about it? Do you not understand it? Let me know what you think about IPOs. I'd be really interested to know. So yeah, that was generally an interesting thing that I thought I would discuss today. The other thing that I wanted to touch on was obviously this 95% mortgage scheme. So I've seen that quite a few people have done some videos on this, which is great because people want some kind of understanding on these 95% mortgages. and it's a slightly different. It's obviously I think the Help to Buy scheme is done now. Someone tell me if I'm wrong. I actually don't know. I think the Help to Buy scheme is done, and they're switching over to this 95% mortgage scheme to kind of help our generation, or what I would consider our generation, so I'm in my late 20s, become generation buy instead of generation rent. I'm quoting Boris Johnson and Rishi Sunak, but I'm not fully. I actually don't fully know about the scheme, but I will say 95% mortgages are available outside of the scheme as well. So I spoke about this a little bit in my previous video. We did a 95% mortgage for our home, and it wasn't a part of the scheme. And it really just depends on your situation and where you're at. Like, it can work, but of course it can not work depending on, the problem with 95% mortgages is you only have equity, 5% equity in your house. And so that can quickly drop. If house prices drop, then you can go into negative equity. And that's what you don't want to happen and can happen. But then and that's what lots of people warn against, but then there's the success stories, like I'm technically a success story where we got a 95% mortgage and our house price has shot right up. So we now have lots more equity in our house, and we technically probably couldn't even afford our house now. So we would have been priced out. You do have to think what works for you or what doesn't work for you. Nick, you said not a chance. Okay, back to the IPOs. Not a chance, far too risky for me. Would only buy if it was included in my ETF. Good perspective. I agree, it's too risky for me. I'm not interested. Steve, hi Steve. You said most IPOs lose, but government floats tend to do okay, like BT, all the utilities, etc. But the sale of Lloyds Bank back to the public tank was meant to be 75p. It's about half that now. Oh my God, that's terrible. Yeah, I mean, yeah, BT. Wow, imagine, when did BT IPO? I'm just wondering. That must have been years ago. Like, I can't even imagine, unless it wasn't that far ago. But I would assume that was over like 40 years ago that BT IPO'd. But yeah, I just feel like it's risk. Of course, any investing is risky, but I feel like that's like another level of risk as opposed to just going for a beautiful index fund or a beautiful ETF, which obviously I'm going to always advocate for. But yeah, it's interesting. Mum, you said if you're buying and plan to stay long term, then negative equity probably wouldn't matter. This is right. Thank you. Like, this is what I say to people. So, they give. Your grandmother was in on the Sorry. Thanks, Mum. My grandmother was in on the BT IPO. Was she? Granny was not. Wow. These guys learned a bit of family history here on a YouTube live stream. That's funny. Oh, I didn't know. Wow. Granny had BT shares. Okay. What happened to them? Did she sell them? Just out of curiosity, just wondering. But yeah, back to what I was trying to say before. If you are planning to stay long term, then you don't really need to worry. I think the panic comes in when you are buying and you're planning to sell within 2-3 years. Then it's like more of a stress. But if you're planning to stay long term and you buy a house that you're like, I'm happy to stay here at least for 10-15 years, the chances are in the UK housing economy or market that house price will increase or at least stay the same over time, where you're not going into negative equity. So kind of like investing in a way. I'm not saying that's always the case. There's going to be those rare occasions where you've had a house for 15 years and has it happened? Maybe it has, but I feel like it'd be very rare in the UK for you to own a house and 15 years later, the house price has gone down. I feel like that's quite rare. Okay, Mum. It helped her buy their retirement home in Jamaica. Did it? Oh, sorry about this, but I just didn't even. Wow. Oh my goodness, that's incredible. Okay, I had no idea. Thanks, Mum, for filling me in with that family history that I had no idea about. All right, go, Granny. Hold on a minute. So I just want to pause the break real quick. So I knew nothing about investing and shares and all of this. You were meaning to tell me that my grandmother bought these BT shares, but somehow this information didn't trickle down to me to let me know that I need to be investing in stocks and shares. What happened there? Like, come on, that's crazy. Anyway, moving on. Actually, not moving on, but about the housing 95% mortgage scheme. I think I said this in my last live, but don't necessarily rule it out. As I said, there's going to be those bad stories, but there's also those success stories. Hello. And, the way that I saw it, so when I was thinking, okay, we can either buy a house now or we can spend time to save up a 10% deposit and, just wait and save. I really just looked at the housing market, and of course, you can't really predict exactly where it's going to go. But I looked at previous years and what was going on, and it just felt like it was just a constant upward movement, like constantly moving. And so I was like, we could potentially wait another year or two to save up a 10% deposit, and then be priced out. So the houses we were looking at that we could afford, we can no longer afford. So you really just have to weigh it up for your situation and think ahead, because I personally did definitely feel like you have to. I felt like we would have been priced out, and we would have constantly been having to save more and more and more to finally get the house that we wanted. So just think about it. Right, comments. So the last thing that you said, Mum, every house I've bought bar one, has gone into negative equity soon after purchasing, and I've never lost on one of them. Right. So it slips into negative equity at first, and then over time this is it. Just give it time. It doesn't it's just like the same principles of investing. If you're going to invest for a year, you have a high chance of selling. If you were to sell your investments after a year, you have a high chance of losing all that money. No, not all that money. You have a high chance of getting less out than what you put in. It's really simple. Like, you definitely have less. You definitely have a high chance of that. If you leave it 10, 15 years, you have the chances drastically change in your favor that you can actually make a profit from selling your investments. So it's really, to be honest, I feel like these concepts just kind of go throughout multiple aspects of life when you really sit back and think about it, about personal finances. If you give it time, and you allow it to work its magic, over time, it'll be fine. Also, hey, there's 16 of you on here. Fantastic. If you're enjoying, please put a thumbs up, just helping the YouTube algorithm. And yes, a thumbs up is just a really nice thing to see. So thumbs up, thumbs up, thumbs up. Christina with a spoon. Mortgages make me nervous, but I know that I have to step into that arena soon. Oh, girl, mortgage. Hey guys, thanks for the thumbs up. I'm seeing you guys do it. Thank you. Yeah, Christina, I know they are nerve-wracking, but what I will say is that just find a professional that you feel comfortable with, like a mortgage broker, and talk to them about how you feel. And you're not obligated to ever go ahead with something, so just speak to them. That's what my husband and I did first. In fact, when we decided to view houses, we came and we didn't actually think we could afford it quite yet to buy a house. And we met with a mortgage broker that day, and we went through all our numbers, obviously, and he's like, let me see if I can do a decision in principle, but let's see where you're at financially, and if what you can afford, and if you can afford to buy. And And so we went through all our numbers, and obviously there was no obligation to go through with anything. And it was just really helpful to speak through where we were at financially, and because I was like, oh, there's debts that also need to be paid off, whatever. And very surprisingly, we were fine to get a mortgage. And he's like, you guys can buy. We looked at each other and we were like, what? He's like, yeah, you guys are in a position to buy. You can have decision in principle. And I was like, oh my God, this is crazy. But we spoke it through. I think we spent maybe like an hour and 20 minutes with him. We just spoke through everything. Like, this is what we've got. This is where we're at, blah, blah, blah. What can we afford? What can we do? And, having, what I would say, Christina, is just having that person to talk through with you is just, it's just a really nice way to, it's just a really nice way to kind of see where you're at and see what they recommend and get professional advice. Because they'll tell you, if they don't think that you're in a position to get a mortgage and they think you're going to be denied by the lender, they'll let you know and let you know maybe what it is you need to work on in order to be approved. But don't worry, Christina, like, congratulations on, starting your journey soon. And I'm sure it's going to go amazing. And thanks for joining again today, Christina. It's good to see you here again. And JB, you said financially in the building. Hey, good to see you, Jay. Her Penny Potential, Helen. Hey, gal. Hey, good to have you. Steve Kaplan, if you think of being the highest bidder on a house, by definition, it's worth less at the point of purchase as every other bid was lower. Then think of all the costs too. I'm trying to, if you think of being the highest bidder on a house, by definition, as every other bid was lower. Okay, then think of all the costs too. But what are you saying by that? Are you saying that if you are the highest bidder, then technically the house isn't worth what you're bidding? Is that what you're saying? Can you clarify that for me? That'd be great. I want to get what you mean. Mom, you said everything is cyclical. 100%. 100%. Everything. Like, everything comes in cycles. In my latest video